Welcome back to the Retire Young radio show. I am your host, Joshua David. Having a great time with my great friend, my great pal, Mr. Al Connickson. Al, as we get into this next topic, it's a hot topic that's talked about on TV. You see it everywhere, and it's retirement. Everybody has a goal to reach retirement. Some people have a certain age. Some people don't know when they're going to retire, which is unfortunate. But everybody wants to reach there as soon as possible. Now, we have a retirement crisis, and people can't retire. So there's really a disconnect from the institutions or the smart money and the public. Now, a lot of that is knowledge and skill, which the public doesn't have, and that's why we talk a lot about that skill and the knowledge in these investing classes that you teach every week. But they're doing different techniques and they're utilizing different concepts in their retirement accounts. They're not just buying and holding. Now, we're seeing a lot of people that in their retirement years or preparing for that, they want to have or understand how the smart money is creating income during retirement. What are they doing? Now, there's other asset classes, which you mentioned in the first segment. You mentioned the futures and the Forex market. Let's first discuss what those are and why the smart money is using those in their retirement accounts sometimes to create that income.
Mm-hmm. Well, in any, this should be part of anyone's investing and trading life is to have, I mentioned that plan, but there's really two components that are important. One is to have kind of a foundational strategy that you're going to use regardless of what you're trading or investing, whether you are doing it on a daily basis, weekly, monthly, annual basis. It should be the same basic strategy. That's our core strategy. And the other is asset and strategy selection, and that's very important. And that's going to vary from person to person. There are people that choose futures. There are people that choose Forex, people that choose options, some choose stocks. And it really comes down to sometimes your personal goals, your needs, what we call your why, and sometimes it just comes down to what is most interesting to you. But the institutions are doing that. They're trading in the futures market, the foreign exchange market, the options market on a regular, basically daily basis, but they're putting their clients into what we call a buy and hold, or more appropriately, buy and hope, or what I say maybe even more appropriately is buy and pray, kind of a portfolio where you hold on to it for years. It really is what I would consider more of a one-size-fits-all cruise control kind of strategy where a mutual fund or a retirement plan sponsor will come in and say, here are a list of things you can invest in within our plan. Typically, there are mutual funds. That's what most people are in. And then what happens from that point on? The choices, the decisions, the changes are made by the individual retiree. They're not getting help in most cases from the plan sponsor, yet you're paying fees to that plan sponsor. And those fees can be huge. Basically what's happening is that you are really ignoring or not taking advantage of the assets and strategies that can be used not just for long-term buildup of wealth and a portfolio for retirement, but if you have income needs now, if you have cash needs now, you can't do that with something that you're supposed to hold on to for 10 or 20 or 50 years. Mutual funds are the go-to investment that most people are put into. That's what Wall Street is doing. And basically what they're telling you is that here is probably the best investment that there is for you because you've got a professional manager that's controlling your assets. Well, it is the best investment, but it's the best investment for Wall Street, not for individuals. There are too many disadvantages. Mutual funds can only make money if the market is going up. They can't short the market. They really can't do anything to participate in a market that's moving downward in a downward movement. They can't provide protection. In other words, you can't have a stop loss, for example, on a mutual fund. You can actually own a mutual fund that is down in value for the year, but you will have to pay capital gains tax on that mutual fund. If the mutual fund manager has sold individual stocks that they have a gain in, the owners of the mutual fund share in the capital gains tax of that particular stock, even if the fund overall is down for the year.
Well, that's what a lot of people don't understand is those fees. There's a lot of fees that come along with that. And if you looked at your Well, most people don't look at their 401ks
Yeah,
and
but a lot of
IRAs.
people are told not to look at them.
And why is that? Because they don't want the public to understand or want to learn that. Now, these are techniques and concepts that we have access to, Al. Us as the public. So, Al, we're talking a lot about fees and how much a 401k and IRA can potentially cost an individual. Now, there's concepts and strategies that you can eliminate that. Now, self-directing is that one way because you don't pay those fees. So let's talk about self-directing, what it is, but how our listeners can understand how to start that too.
Well, a lot of people are conditioned to believe that they have to have somebody helping them with their finances, with their investments and trades. And a lot of that comes from your parents or grandparents. And when they were investing, when they were young and maybe starting out, the only way you really could participate was to use a broker. The internet wasn't available, so they weren't able to do trades like they are now. The discount brokers weren't available. You basically had to use a broker. And I think that's still what their advice is. Yeah, get a broker, use an advisor. And people don't understand that the tools, the resources, the sophisticated platforms, trading platforms, high-speed internet, all of those are available for us as individuals and really give us advantages over what some of the big firms can do because they have such large positions. It's harder for a big firm to get out of a big position or get into a full big position because of the size that they have to do it with. We can do that as individuals. We're not, in most cases, buying a couple million shares of something, spending maybe $100 million on a position. But the institutions are doing that on a regular basis. And that's part of how we identify what they're doing. They're not intentionally telling us what they're doing, but they can't help it. It's in the charts, in a price chart. If you know what to look for, that's what we teach our students to do. Read a price chart like a radiologist would read an X-ray or an MRI.
So you talking about sophisticated platforms. So our listeners are probably thinking, well, if those are so sophisticated, how am I supposed to learn that?
Sure.
How do you help people become more comfortable, but confident to learn those?
Well, I mentioned earlier on in the show simplicity, keeping things simple. The platforms are sophisticated because some people want to take this to a very high level, maybe trade this every day and maybe set it up as a business. So there are a lot of things there that are available for you that you don't need, that most investors don't need, don't know how, they don't even have to worry about that part of it. You keep it simple. We have even taken it a step further. We have a trading analysis education platform for our students called Click, which really, in the core strategy, I mentioned earlier again, a plan, a strategy should have a step-by-step process. Click takes you down the steps of our process. You have to do step 1 to go to step 2, step 2 to go to step 3. It takes you down that path. It's almost like grabbing you by the hand saying, don't overthink about this. Let's just follow these rules. And then the end result is that this is either a good trade or a bad trade. And that really is important, by the way. The important thing is not emphasizing or thinking entirely just about the profit you can make, but think more about what you can't lose or don't want to lose. And Click's going to tell you, it'll keep you out of a bad trade. It can't keep you out. You can always go around things and do what you want, but it's going to tell you this violates your parameters. And each Click platform for each student will be set up based on them specifically. So it's customized to them. And the number one thing, because one of the things I know people are thinking when they talk about or think about managing their own assets is the risk part of it. And that's the important part that needs to be managed. That's the number one thing you should learn. And with risk, the number one thing you put in to customize it for you is the maximum amount of money that you are willing to risk in any trade. It might be $50, it might be $100. So no matter what you're trading, whether it's a leveraged asset where you might be controlling $100,000 of an investment or $50,000. If you say, I'm only willing to risk $100, Click is going to tell you, no, you violated that, you shouldn't do it. It's going to help you by keeping you out of your own way.
Yeah, and that's one of the things about the financial markets is a lot of people just don't know what to do. Now think about this. If you had something that could help guide you through your process, it's not going to tell you what to do, but guide you through your process to make better decisions. I'll let you put your own imagination to that, right? So if you have better decisions, what could that do? And it's all about having a plan. If you have a plan, follow your plan. Just like any any business would have a business plan, the same thing. So, Al, you really dissect you explain what Click is and the step-by-step process that comes into play when you place your trades in these investing classes. Al, we still have a lot more to discuss in this next segment, the last segment, actually. I want to continue this discussion on retirement, 401ks and IRAs, because we haven't really dissected the options market yet.
Right.
And we're seeing a lot of people come to these investing classes, want to know more of what the options market is and how they can get started. This is Josh and Al with the Retire Young radio show. We'll be right back.
The Online Trading Academy radio.
Top times for everyone.
Sounds good,
59,
thanks.
got it.
All right, so that's my deal. 59.38.
Yep. Sounds good.
All right,
Timeshare
thank
giants
you.
ever since, so no one knows the centers better
For
than
some
me.
reason,
Today we have over 200 employees and